I just want to do a quick video recap of how I establish supply and demand zones and how to trade them. Whether you're day trading or swing trading, it's a very effective strategy. It's a natural way of trading, and you don't have to rely on any indicators. Rather than, you can add them. It's all about preference. So let's dive right into it. First off, I like to start from a bigger time frame, work my way down. We call that top-down analysis. So I work from a daily to a 4-hour to a 2-hour to a 1-hour, 30-minute, 15-minute. Occasionally I'll use a 5-minute, but that's only if I'm charting intraday. I might get into that later at the end. Some people do weekly, but I really don't stay in trades that long. I'm more of a day trader, so I'm going to stick with the daily. So for this example, I'll quickly go over what I look for in a zone. So for demand, I'm looking for where buyers have stepped in. So I'm looking for a low point or where price has based out, consolidated. We call that a balanced period, where buyers and sellers are agreeing on a price. It's very healthy in general. And we look for a reaction off of that consolidation period. So from here we see a low point, and we're going to go from the bottom of the wick to the top of the body, and that would capture our demand zone. So when we were up here, we would look for, supply right now is exceeding demand, and what can we look for when our buyers going to step in? So we know we really don't have a strong zone until here. And by the way, if you want to mark these zones precisely, you can go in and select price level, horizontal ray. By the way, I'm on tradingview.com. If you are looking for a good charting platform, I highly recommend this. And I would mark the top and the bottom. I go bottom of the wick to top of the body for demand, and for supply, I would go top of the wick to bottom of the body. That captures where the buying and the selling pressure is for these zones. So here, got to make this red actually. Red for supply, green for demand. So we reacted off of a daily supply zone, and we rejected all the way into a daily demand zone. And we rallied off that zone. We invalidated supply here, so we would delete this. It's invalidated. And we pushing higher to all-time highs, so there is no clear demand. There is no clear supply at these levels, unless I zoomed into a smaller time frame to really capture that. So that's just an example of the past of what I would look for, all that good stuff. So let's go in and see where our current price is at, what to look for. Since it is pretty balanced right now, price is pretty flat. We'd go in, check out a smaller time frame. Let's go to the 4-hour. This is a good example right here. So Monday morning we opened up and we just started dumping. And at what point do buyers step in is what everyone's asking themselves. So we got to go look back at historical price action and what happened. So what I would look for here is the bottom of this wick to the top of this body. And of course, got to make that thing green. By the way, right click that, go to settings, style. I have this extended to the right so I don't have to drag it. If you don't want to do that, that's okay. You can go in and text, and you can make this a 4-hour demand zone. Personally, I don't like to do that because it places it kind of weird. I just go in and text, and I will write 4-hour demand. And if you want to make your zones precise, go ahead and press the zoom button. Go over here. You can get it right at the top of the body and right at the bottom of the wick. And of course, mark your price levels. So we got this, and let's go ahead, zoom back out, and check how it reacted. So if we go to a 15-minute zone, just for sakes of seeing what would happen this Monday morning, market opened right around here, this candle. and we just started tanking and right into demand, and buyer stepped in right there. So this is actually where I would be looking to go long. Since there was no clear supply zone here, you really don't know this was the top. There was no saying in that. You really can't establish supply at all-time highs. So you're looking at a spot to take long. You could grab puts and trade momentum here, but if you're trading strictly supply and demand, you're waiting for a zone reaction to go long or to go short. So back to the 4-hour. So that trade worked out. For the 4-hour supply, we would look top of this wick. We would go bottom of the body, make it red, slap a label on it. 4-hour supply, make it red. And of course, I would go and I'd mark the price level so I know. But for the sake of this video and time, I won't do that. So let's move into a 2-hour zone. So you see we have some supply within this 4-hour zone. That would be called a stacked zone. So we're looking to see which of these zones actually reacts. Just because it goes into this right here doesn't mean it's time to go short. You wait for a tag of that zone and a reaction. So mark it there to there, and we would slap a label on, call that 2-hour supply. Oops, 2-hour. And of course, mark the price levels. Like I said, I'm not going to do that for the sake of this video. With this, I wouldn't mark demand there. I would go in and check on a 1-hour to see. Yeah, this would make a whole lot more sense. Right here, we would mark a 1-hour demand zone. Okay, make it green, slap a label, 1-hour demand. At the end, I would go in and I would make all these level, put them in the same area. So you see that nice reaction. We're on a smaller time frame now, so you're not waiting for weeks for this zone or this zone to react. You can just do it intraday. So we go into a 30-minute zone now, and right now price is rallying. We had a rounding bottom, arguably a double bottom here off of this low. So that's bullish as of now, and right now we're rallying, and we're looking for an area of which we can expect a rejection. So what we look for here, I would look for the bottom of this body to top of this wick, somewhere in that area. That's pretty broad, so we can go in and look at a 15-minute view. So I would go here to here, go ahead and mark it, see if it works out. If it breaks above 34.75, that means this is invalidated. We could slap a label on there as well. 15-minute supply. Yep. So, from the steep sell-off, there really is no clear supply until here. This is not that strong of a zone. This is now a used zone, as we've already tagged it. A used zone is weaker than a fresh zone, as there's less buy orders or sell orders lingering in that area. So we just kind of wait and see how price reacts off of the next level. If you wanted to mark demand, I would say price kind of caught some bids here. So there'd be a fresh 15-minute demand zone here. And that kind of captures the general idea of what I'm looking for. What indicators I use, I'll jump into that. Really, all that I use is VWAP. It's a pretty good day trading strategy if you're using the 5 or 15 minute. I'll go ahead and mark all these different time frame zones, and I'll go in on the 5-minute intraday and just see how price reacts off these levels. So for here, off of demand, I would probably take this long up until VWAP. So right here, take profits there. looks good. You're never worried about what could have been or all that. You're just looking to flip profits for green. So that kind of captures what I'm looking for. Some people like to use EMAs. 9 and 21 is a pretty common one for day trading. You can pair that up with supply and demand zones. I personally don't. Other people use, MACD, RSI, all that. I really don't. But if you have any questions, let me know. I think this captures the majority of what the idea of supply and demand trading is. So go ahead, hit that like, comment, and subscribe. And I thank you for watching.